Hi guys, my name is Dennis, and in today's video, I'm going to share with you what is the optimum salary that you should be paying yourself as a business owner in 2023-2024 tax year. So, before I jump into the salary and dividend figure for yourself, I want to delve quickly into the taxes so that you have a broader understanding and overview of the UK tax system. So the first one is the income tax rate. So if you are earning up to 12,570, you will have no tax to pay, and that is basically your personal allowance. Anything up to personal allowance, it's 0% tax. The next is the basic rate taxpayer, which is ranging from 12,571 to 50,270. And between that, you will be paying a tax rate of taxes of 20% on it. And the third one is the higher rate, which is ranging from 50,271 to 125,140 pounds. And that is taxed at 40%. So the second one is the national insurance for 2023-2024. So there are three limits in national insurance for 2023-2024. The first one is the lower earnings limit. So if you're earning up to 6,396 or 533 pounds per month, you will be entitled to receive state pension. The second one is the primary threshold, which is for employee, and basically it's employee national insurance tax that you have to pay. If you're earning up to 12,570 or 1,047 pounds 50 pence per month, you will be not paying any employee NI. However, any salary above that, you'll be taxed at 12% up to 50,270 and 2% over 50,270. The third one is the secondary threshold, which is applicable for businesses. Any salary you earn up to 9,100 per year or 758 pounds per month, you won't be paying tax. However, if you are earning above that threshold, then you'll be paying 13.8% employer national insurance. So, moving on to the corporation tax. The corporation tax is payable against the net profit made by the limited company, and the salary and employer NI are allowable expenses. So, right now, the corporation tax rate, if the profits is below 50,000, is 19%, and any salary above that, you'll be paying a marginal relief, which is taxed at 26.5% between 50,000 to 250,000. Any profits above that, you'll be taxed at 25%. Now, moving on to dividends. Dividends is paid from retained earnings or profits of the limited company and is not subjected to national insurance or income tax. You also get a tax-free dividend allowance for up to £1,000. So moving on to dividend tax rates for 2023-2024, there are two levels. One is the basic rate and the second one is the higher rate. So any dividends received above basic rate, between 13,571 to 50,270, you'll be taxed at 8.75, whereas any dividends taken out above 50,271 and 125,140 pounds, you'll be taxed at 33.75%. Moving on to the most important topic is the optimum salary for 2023-2024. So the recommended salary that I would tell everyone is to take 12,570 a year, which is equivalent to £1,000, £1,047 50 pence per month. So basically, if you're taking that salary, you're basically using the personal allowance, and hence you won't pay any income tax on it. It's also above the lower earnings threshold, which means you qualify for state pension. But it's also just below the primary threshold, which is same as personal allowance limit, which is 12,570, and hence you won't be paying any employee NI as well. However, since the salary of 12,570 is above the secondary threshold, you will be paying employer national insurance on the difference, and that works out to be £478. I would still recommend to take this salary as opposed to taking a salary up to your primary threshold, which is 9,100 a year or £758 per month. The reason being is that the employer national insurance is a tax deductible expense, and hence you taking a higher salary, you're going to save a lot more in corporation tax. So I've done the calculation for you. The 3,400 over here is the extra salary that you are taking plus the employer NI, and if you multiply with the corporation tax rate, which is the minimum, you're going to save £750. However, since you're paying £478 for employer NI, that saves you about £272. Now, bear in mind, if your profits is above 50,000, then this savings is only going to increase. I'm just taking the lower lower limit for the profits. Yeah, that's it really. The other thing I wanted to highlight was that the NI payments will need to be paid monthly or quarterly. So that is an obligation that you have to pay every month. The second thing is that if you are two directors or one director and few employees, you are entitled to receive £5,000 employment allowance, and that will basically reduces or completely takes away the employer national insurance that you were supposed to pay. Hence, your savings is only going to increase if you're able to get the employment allowance. This is not applicable for single directors, but if you're two directors, then you are entitled for £5,000 employment allowance, and that will basically offset the employer and I, and your savings will only increase, and you're going to save more money straight away. Yeah, that's it really. So that concludes today's video, and I hope you found this video useful. Take care. Bye bye.